Welcome back to another Mesh pre-weekly technicals. We're looking at BTC and it's been a big week. Please don't forget to like, comment and subscribe. Free Telegram group as well in the description below. So big week. And I think we can officially say adoption is here, especially because this big week's involved a lot of institutional movement. We've had the likes of Deutsche Bank and various other institutional banks out of Europe register custodian services for crypto. We've had the likes of trillion-dollar asset management companies like BlackRock, Invesco, Valkyrie, and WisdomTree, all filing for a spot Bitcoin ETF. We've had a leveraged ETF approved by the SEC, 2x leverage, as well as what I think is probably one of the biggest bits of news, which is the EDX exchange being launched by Fidelity, Schwab, and Citadel. So massive institutional crypto week. And I don't know, it's difficult to say whether that's what's driven the price up or was this always on the cards, because we've been speaking about this now for 3 weeks. If you'd followed our technicals for the last 3 weeks, you'd be close to a play with 20x leverage. So you'd probably be close to 7x on your trading account. But we've had approximately 30x movement from that call, that reversal 3 weeks ago. So big movements. And it's been interesting. I think with the likes of ETFs going live, it's important to note that crypto isn't really regulated or officially regulated. It is in some jurisdiction, but I would say that those are developing legal structures as we come, or as institutions and governments come to learn and educate themselves on the space a bit more. So ETFs present an opportunity for investment companies, institutional investment companies, to get exposure to Bitcoin without directly holding it, as well as taking the liability of custodianship. So that should drive a huge amount of capital into Bitcoin. And I would say it's been very well timed, as well as the likes of the EDX exchange by Citadel, Schwab, and Valkyrie, that they require liquidity to sit behind. And it's, I guess I wouldn't say it's even speculative. I think the SEC lawsuits against Coinbase and Binance were very timely, far too much of a coincidence, and I would say, and I think it is an opportunity for the government to catch up. There's also the likes of Binance in Europe ceasing operations in several places. I think Belgium or the Netherlands was the most recent to go. So is there another exchange coming out of Europe? That would be interesting to see. But yeah, very big week. And I think from now on, we're really only going to start seeing more upwards movement. And this is, as I've been saying, the beginning of the next bull cycle. However, there are various intermediary levels to come in. Bearing in mind, I've been saying to get back into spot from when we hit our lows around the sort of the 15 to 19K region. So looking out, let's just zoom in on the monthly here a second. Have we got a 3-month closure this week as well? I believe we do, June, yeah. So we actually have a 3-month closure, so this would be interesting to see. Let me just pull back one more. Yeah, and that's looking very bullish on the 3 months. Would like to see possibly a little pullback, but I wouldn't say the 3 months isn't very important from a TA perspective. But let's just go back to the monthly. We've had this confirmation that I called last month of our break to the upside from the 1st of March. So we've confirmed that breakup, and this is where we've had our large pump, and this is what's been called. We called it at the low, and we've had a break of our previous high as well. So we're currently facing a resistance around I think our last high was around 30.4K, just shy of 30.8K. Bow back into the weekly, and look at that beautiful candle. We have got a weekly close today. And so you can see this weekly movement has broken out of this ascending triangle almost perfectly where it converges with the horizontal. So huge amount of volume. As I said, we're facing resistance at this key level. We're currently sitting at 30.6K. That high we got was, we did see 31.5. So that is of the option. And if we do close above this key level of 31K, then we're going to see this sort of upper band of 34K hit. I think more than likely, and personally, I would advocate more for some organic growth, is that we retest some of these lower levels on a smaller time frame. So if we just come down to our daily, as you can see, beautiful movement out of the ascending triangle in the daily formation. But as you can see, we're seeing that sort of volume dying off. It is the weekend, which is also expected, but a closure below this level, and we should retest back down here. And I would like to see us retest it around the 27K level. That would give us this confirmation of the upwards break here and lead us on further to newer highs. So that's what we're looking at there. If we have got a rising wedge formation here on the daily structure. So printing bearish. If we go back down to the 4-hour, potential falling wedge structure. Yeah, falling wedge structure. So looking for actually a break possibly today, retest some of these newer highs on the 4-hour chart. But as I said, look, the daily is printing more bearish, 4 hours looking reasonably bullish with very low volume. So I would go off the daily structure, and I am expecting us to retest these lower lows. And look, I feel safe to say that 20K would never be revisited again. I think 27K is our next key entry for spot. Failing that, you're probably looking to get in around the 28.5K level on a spot. So as I said, we're looking for this retest here before proceeding back upwards. Just one thing to look at, and I don't think I've got it highlighted on this. Let me check actually. No. But yeah, just looking at this weekly, this level here at the 34K level, we haven't had a confirmation on the weekly time frame of this breakdown. So this is another key level of interest, and it does coincide with a CME gap, and I'll go to the CME gap in a second. I just need to change chart. But what I would like to see, and what will most likely, as I am very much in favor of the bullish structure and the beginning of the bull market here, is that we fill that CME gap, see a lower retest around here before proceeding back upwards, breaking into very much new yearly highs. As I said, let's just go into the CME. Okay, so we had this CME gap here actually that's just been filled. And that was the 27 to 28K area. So that's another reason for this large volume candle that we saw. So one more CME gap, as I said, 35K, and that coincides with that level I did point out on the previous chart. So as I said, more than likely, we're not in a bearish structure, so we're not going to wick into the area. We'll most likely fill the gap before coming down for a nice retest and then proceeding upwards into those yearly highs. So that's BTC. I do encourage you not just to follow our weekly technicals, but to subscribe to the free Telegram group in the description below. A lot of the positions that we're calling from weekly technicals, we're giving further updates, and a little bit of support goes a long way. So please don't forget to comment and subscribe as well.